For more on Bitcoin's drop and its rebound today, let's bring in Anthony Scaramucci. He is founder and managing partner of SkyBridge Capital. Anthony, it's good to see you. Nice ride we've had in the last little while here. It's interesting to kind of list the fact that we now have a favorable regulatory regime. That's preceded by the fact that, of course, institutionalization has occurred. The ETFs are everywhere. It's almost as if crypto Bitcoin bulls got most of what they wanted, and I don't know what to do with it.
Well, listen, there was a moment of euphoria last fall when Bitcoin got to its all-time high. I turned to one of my partners and said, we'll likely get to 200,000, but my guess is we'll test 70,000 before we get there. And he looked at me like I was crazy, but that's the nature of Bitcoin. This is still a very early adopting asset. I've been on CNBC for the last 5 years talking about Bitcoin, never calling it an inflation hedge, never calling it a dollar substitute or digital gold, but calling it an early adopting technical asset that has money-like characteristics and gold-like characteristics. But if you look at the demographics around Bitcoin, Michael, they're still young demographics. And so when you had debasement fears coming into this year, you saw the rally in gold and silver. That's because the older people have the money and they believe in gold and silver, and they're still not quite there with Bitcoin. And so one of the real gatekeepers here is the Clarity Act. I think there's a lot of fence sitters, institutions, commercial banks, and otherwise that are really not going to move on Bitcoin until they get clarity from the U.S. government. And so I think it's a coin toss now whether or not that gets approved. Some of the Democratic senators I've spoken to say that it will, but I think that's one of the big gating factors here, and this is typical volatility for Bitcoin.
Anthony, why is it, though, typical volatility for Bitcoin when there's been so much change to theoretical change to who holds it, with institutions coming in, with ETFs, with the rise of digital asset treasury companies? Why isn't there more stability? Why does this look like a run-of-the-mill Bitcoin pullback that we've seen over the past, 10, 15 years?
Well, Melissa, I actually think it's been masked somewhat. I actually think the declines, if you look at the 4-year cycles in Bitcoin, the decline could theoretically be deeper. If you just did a map of those 4-year cycles, you were looking at a retest somewhere at the 38,000 level. Now, it did hit yesterday the 200-day moving average, and it seems to have held there. I also like the fact that the Fear Greed Index, which is from 0 to 100, you're at 5 right now, which is like one of the lowest indicators that we've had in the history of Bitcoin. So there's overwhelming fear. But I think we've actually had a softer, believe it or not, Bitcoin correction as a result of strategy, the ETFs, some institutional buying. But remember, this trades on its last trade based on liquidity or illiquidity. And I'll take you guys back to October 10th. Lots of circuit breakers tripped at Binance. There was something like $28 billion liquidated very quickly. And it does look like somebody got blown out or margin called over the last week. I mean, you had a 25% drop in Bitcoin and today a 9 or 10% rise. So, yeah, it's a garden variety correction for Bitcoin. We're still bullish. I frankly bought more Bitcoin yesterday. I intend on buying more Bitcoin next week. But it has been muted. And so this is the thing I always tell people about Bitcoin. If you don't like this level of volatility, this is an early adopting asset. Amazon went down 50% 8 times in its first 15 years of existence. That's sort of what Bitcoin is doing. If you don't like this volatility, you have to stay away from this asset.